What's up, you guys? It's Matt here. Welcome back to another NFA video. In this one, we wanted to talk about AMC again. While we have some news about AMC that could be good news, but could also be bad news. And it's mainly good news for the business themselves and the way that they're functioning and the things that they can do, with the news that's ahead of it, with the money that they made from it. But then it's also bad and good news for investors because it's bad news for investors because potentially it could create, it did create the dilution that we don't want to see and continued dilution that we don't want to see. However, it's good for investors because if AMC is making money and finding ways to pay off some of their debts, then it's a great thing long term. It's just when it comes to us wanting to gain so much out of this, it takes away that possibility, or at least limits that possibility of, benefiting in the largest way possible. While we think, going to $1,000, would be an insane price increase at the current level with the stock split, the dilution, and now this second round of dilution. And I'll call it second round of dilution because you had the ape conversion and then you had dilution, of AMC stock here by selling a certain amount of shares. You now have a little bit of an issue to where you're not making as much, and $1,000 per share is not actually worth the same amount it would be if they had 500 shares available. So before we get started, guys, make sure you hit the like button, hit that subscribe button, hit that notification bell for more videos like this one. Also, make sure you check out some of the links down below. It does help out the channel. And if you guys are new to my content, or if you're not new to my content and you saw my credit card videos that I was creating, I have a credit card channel specifically dedicated towards credit cards and, different reviews and stuff. So if you want to check that out, I'll provide a link down below to that as well. I'll also put something up in the cards during this part of the video if you want to, subscribe to that channel. So anyways, let's talk about AMC right now. AMC currently standing at a level, actually, let's go to the stock here. So AMC currently standing at a level of $8.11. It's down 1.6% today. As you can see here, it was at a high of $9.10, but now you're seeing it down basically $1 from that point. But from the previous close, where the previous close was around $8.24, the open today was at $8.91. We did see a decent size increase during the pre-market. If we go and look at this here, we see that decent size increase, picking all the way up to in the pre-market of $9.31. You could see right next to it where my cost basis is and why $1,000 doesn't really mean as much like it did before. Currently, my cost basis is sitting at $1.90 or $190, and the value is at $8.12. I only have 147 shares, which I would have liked to have had a hell of a lot more, and I did have 1,400 shares or 1,300 shares before everything that happened decided to happen. But now you're seeing AMC that is down because of the raised money. Now, let's get into that information, which we do have right here. So AMC shores up its finances by raising more than $325 million in a stock sale. Now, AMC Entertainment Holdings said it raised more than $25 million after successfully completing a stock sale aimed at shoring up the financially struggling theater chain operator. AMC said it sold 40 million shares at an average price of approximately $8.14, each in the at the market offering, which was launched September 6th. The company explained the money significantly boosts AMC's cash reserves, addresses current liquidity concerns, and fortifies its balance sheet. CEO, sorry, it's hard to see this stuff because I'm far away. I need to increase or maybe I just need glasses. I don't know. CEO Adam Aaron added that the sale has bolstered our ability to survive and thrive. AMC also noted it has gotten a boost from a 39% year over year jump in box office receipts so far in the third quarter, and it anticipates a spike in sales from the much anticipated Taylor Swift Eras Tour concert movie set to release next month. The stock sale was the latest effort by AMC to stay afloat. Last month, the company won a court approval to convert its AMC preferred equity, which is APE, shares into common shares, and then initiate a 1-for-10 reverse stock split. The shares of AMC Entertainment Holdings rose in early trading on Thursday for the fourth consecutive day and were up 2.5% by 11 a.m. Eastern after falling to an all-time low last Friday. Now, again, after seeing that increase, we're now seeing this fall again. You saw AMC that was up to a way higher price point, a way higher, market cap a while back, when we saw, squeeze that was going through, potential start to the squeeze. But then, that completely turned around as we saw like $76 and things started falling down, and, they didn't have any ability to make money off of that. And that's upsetting, right? It seems like they're selling shares at the wrong moments. And if they would have been able to sell shares at these higher moments, yes, it would have taken the value away from us and, taken that wind beneath our wings. And now we don't have that anymore. But it would have had full survival of the business and a ton that they would have been able to make off of that if they were at higher points. But they had to get approval to do all of that. So honestly, I think we kind of put them in this situation, right? Because if it wasn't for all of this to happen, where they get approval to dilute a position and, add more shares that are out there, add more common stock, then if they didn't have that, then the company would not survive. And if the company doesn't survive, who wins? The shorts end up winning. So it's definitely a problem that we kind of put together because we were all being greedy, and that's what greed can do to everybody. So I think, yes, it would have had the same outcome, but instead of raising $320 million, they probably would have raised maybe somewhere around $4 or $5 billion just by selling at some of those levels rather than an average price of $8. The last time they sold stock, I think it was at like $9 or something. So it seems like all of these low levels, they decide to sell more stock at because that's the only time they can. While they wanted approval to do so before, they didn't end up getting that approval to do that. But anyways, I'm not saying it's a good thing. I'm not saying it's a bad thing. I'm not saying it's totally our fault, but we should understand our role within this and why this has happened. But while we see, people saying, hey, this can get to $1,000, now it can get to easily $1,000, that's not a significant market cap at those levels. And I believe, yes, it can get to $1,000, but now for a squeeze, we need to be pushing for a lot further than that. Because if you look at my cost basis is now $190, and it's probably going to just get worse as more stock is added, out there, more common shares. So anyways, guys, let me know what you think about this. Is this significant? Is it our fault as to why this has happened? Should we take ownership, or are we not taking any ownership and it's all Adam Aaron and it's all his fault and everything that has happened there? It's difficult. They are now starting to turn a profit from what we have seen. And you're seeing a lot more people that are going to theaters. They have a lot more connections and a lot more things that are happening to generate revenue. So hopefully that can pick things up, and then we end up seeing a level to where we can see a reverse stock split. That could be a possible, or not a reverse stock split, or a stock split rather than a reverse stock split. So, and that may be long-term, but we'll see. Guys, hit that like button, hit that subscribe button, hit that notification bell for more videos like this one. I'm going to get out of here, and I'll catch you guys in the next video. See ya.